Hey folks, Bob Desmond here at the Contrarian Trader, and welcome to Best Stock Charts for the coming week. The show is going to go like this today. We're going to go over how our week was last week. Then we will segue into the stocks that we're watching for the coming week, and then I will roll right into the week ahead commentary, which is where I review the health of the overall markets with members. Where have the markets been? What did they do at the end of last week that has caused us to become somewhat more bullish? What is our strategy and what economic data is coming out next week? And frankly, what are we going to do with our positions? And lastly, a deep dive into the best stock charts that I like the most when we plan on executing those trades. So a lot coming up. If you're not currently a member, sign up for the 14-day free trial offer. Click that bar above. It'll take you right over to the checkout page. Cancel at any time. So let's get to it. How was our week? Our week was good. We went short of the semiconductor sector last week, and we made some money here. We're probably going to book profits on Monday. Why? It's because it appears as though the large caps and even the small caps are proceeding higher. We flashed bullish key reversals last week, and while the SOXS, which puts you short of the semis, rallied on Friday, they closed well off the highs of the day, so I'm concerned about a pullback here. So I would rather book profits, sit on the sidelines, watch and see whether or not this market truly does break out. If it doesn't, we can always jump back in to the short side. But as it stands right now, we made a few bucks here. We are going to look to book those profits, unless, of course, some headline news comes out overnight causing the markets to drop in the morning. So more to come, members. Let's talk about gold. And you may be wondering, why am I focusing so much on gold? Because there is so much geopolitical uncertainty, along with the fact that we are running $1 trillion per year deficits. And nobody but nobody seems to care about it, except for the bond market. And when you take a look at the yield curve, monthly chart yield curve, we are about 2 bips away from taking out the lows of July. Now, we were higher on the month. We put in a new monthly high for the month of August, but we have since given up those gains, and we even retraced down to the low of the month of July, which was 0.24, the spread between the 2s and 10-year bonds. So the bond market is sending you a signal. And there's really nothing to be done here except to observe until such time as the yield curve inverts, much as it did back here, 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 and here. What do all 4 of these time periods have in common? Recession. Next week, this bull market will become the longest bull market in history. When you add the observations of what the bond market is sending us, along with the fact that you have the largest short interest in gold in all of history of the tracking of short interest of gold. It's a very overcrowded trade. And we know that gold trades inversely of the US dollar. What did the US dollar do last week? It flashed a bearish key reversal. This is the Dixie. Take a look at the UUP, the dollar bull ETF. It too flashed a bearish key reversal at resistance. Now, do I expect the dollar to go straight down from here? No. Historically, it'll attempt to try to put in new highs, but if those rallies do in fact fade, you will see confidence in the dollar rally fade, and when that occurs, you're going to see shorts begin to cover gold and the gold miners. So that brings us to a conversation with regard to NUGT. NUGT is a leveraged ETF, putting you long of the gold miners. Now, I mentioned to members last week that it was really important for NUGT to close above 1388. 1388 represents prior support. Last seen back in January of 2016, we were unable to achieve that goal. We were very close. Let's go to a 5-minute chart. And you can see that we hit 1390 just prior to the close, but then some institutional sellers moved in and sold the NUGT off. Now, I remain optimistic about NUGT. Why? It's because when you take a look at the far more heavily traded GDX, you could see that the GDX did in fact rally back and it closed above the lows of December of 2016. So good price action at the back end of the week for the GDX. I'm going to talk about the daily charts with members on the weekend commentary of both the GDX and the NUGT. We'll talk strategy. And to give you an overview of what I'm thinking is really about your time horizon. What is your objective for buying gold? Is it a short-term swing trade, or is it a longer-term play on the fact that we are very long in the tooth in this bull market? We have countries all over the globe attempting to de-dollarize because of sanctions, tariffs, etc. You have the petro yuan out of China, which is an effort by the Chinese to displace the petrodollar. And lastly, it's worth repeating, we are running $1 trillion per year deficits. Back to the US dollar. So when you think about all the headwinds for the US dollar, and if the dollar reverses course and begins to move downward, what does that mean for gold? Well, they trade inversely of each other. It becomes the perfect storm for gold and the gold mining names. So more to come. This is more of a longer term play on the ramifications of deficit spending and the fact that we are so long in the tooth in this bull market and in this economic expansion. So for me, this is a long-term play, not a short-term swing trade. So let's approach it from that point of view. Despite the fact that we had a week last week, pardon the pun, I am viewing the pullback as an opportunity to build on positions where nobody else wants it. Nobody else wants the gold miners or gold. So we will continue to accumulate. And then as we begin to break out on weekly charts and the dollar pulls back, we will add more aggressively. So more to come. There's still probably more short-term pain to be felt here. So please, just because I'm speaking about it on best stock charts does not mean that the sell-off in gold in the miners is over. So more to come. Now to best stock charts for the coming week. F5 networks, we have a daily chart, a bull flag continuation pattern setting up here. We're looking for a breakout on F5. We have a beautiful W formation. Now all we need is the breakout. You had RSI, which was in a downtrend. It has broken out. It is now putting in higher lows and higher highs. Volume a bit weak. We need to see this volume increase. Stokes are looking good. They appear poised to want to hook up. So F5 looking really good. Lululemon. I like Lululemon because we broke out the week before last. Last week we pulled back, retested the breakout point. We rallied off the lows of the week. Still closed down, but still a good week net. Daily chart. We flashed a doji star formation on Friday. It's a sign of a decision. Stokes are rising. RSI is rising. I think we're breaking out here. So members, we're going to be looking to put on a long trade on Lululemon. Stick around for the week ahead commentary, and I'll discuss when we'll execute that trade. What must Lululemon do to earn our long alert? Monster Beverage, daily chart. A bullish key reversal on Friday. Stokes are rising. RSI rising. Very close to resistance here. So the chart looks good. My concern here is with volume. Volume needs to rise. Very, very light up volume. And when you're running into resistance, as we are right now, you're going to need some rocket fuel to get through the overhead supplies. Buyers back here and back here, they're going to want to get their money back. So absent some new institutional demand, it's going to be a struggle to get through resistance. It's certainly possible on light volume, but it'll take a longer amount of time to have those people churn out. So Monster looking good, but we need volume. New skin. Weekly chart. We pulled back last week to retest a support level. We did rally off the lows. We rallied also off of the 20-period moving average, which is rising, and that's acting as a rising floor. Now, we'll talk about a strategy that I'm thinking about right now of getting long of new skin on the weekend commentary. So members, more to come on new skin on the weekend commentary later on today. Best Buy, I've spoken about Best Buy for a couple of weeks now. We have a breakout on a weekly chart. We broke out the week before last. Last week we pulled back, retested the breakout point. I think we're breaking out this week. Daily chart, a bullish key reversal on Friday, very close to a buy signal here. Members will talk about when we will execute the trade on the weekend commentary. DPST finally broke out last week. We have RSI rising. I'm going to be going over the 10-year yield with members on the week ahead commentary. The 10-year yield is very, very important to the performance of the DPST. Why? It's all summed up in an acronym, NIM, net interest margins. DPST is a regional bank leveraged ETF. Regional banks are not concerned about trading as much as the money center banks. This is a pure play on lending. So if yields are predicted to rise, the DPST, the regional banks, will do well. So members, more to come on my analysis of where yields are heading on the weekend commentary. Daily chart DPST looking good. No new daily high on Friday, but a good close back above support. Volume, horrible. So more to come here later on today. SHOO, Steve Madden's. We booked profits on Steve Madden the week before last. The weekly chart looks okay. We're holding on to support. I just don't like the topping tails. These wicks, shadows, whatever you want to call them cupcakes. It doesn't matter. This implies profit takers above. So it concerns me that we're seeing these wicks. Now, can we manage to push through it? Sure. We need volume. So to a daily chart, how is volume setting up? Very light. But equally as light is the declining down volume bars. So what we're looking at here is a bull flag setup, and we're looking for a breakout. Members will talk about when we want to pull the trigger again on SHOO. TJX daily chart. Another one where we have a continuation breakout. These are very powerful patterns. One of my favorite. Volume is good. So TGX looks poised to break out. I'm not loving the Stokes here. A bit sloppy. But we've been in the trading range for several days now. So this could be resolved with a breakout. We want to see these Stokes hook up and RSI break out on any breakout of price. So more to come here. Tractor Supply Company, daily chart. We had a bullish key reversal on Friday. Volume was a little bit light, but we've been consolidating nicely here, holding the 79 level. It's critical that we hold the support level. If we break the support level, I would avoid like the plague. But I'm predicting that we will get a continuation breakout on Tractor Supply, and normally when you get an 80 handle on a stock, it usually shoots up to 100 as long as you have the overall markets rallying as well. You can see back here, we first got the 80 handle on Tractor Supply, but what happened at the beginning of the year? The markets fell apart, right? So you need the wind at your back, the wind being the markets. So as long as the markets could break out this coming week and remain in a bull run, I think Tractor Supply could head to 80 in a heartbeat. And that is it for best stock charts for the coming weeks. Members, let's segue over to the week ahead commentary. And if you're not currently a member and you're not ready to join yet, please follow me on YouTube, subscribe, follow me on whatever social media platform you found us on. Leave a comment. I'll certainly reply back to you. And if you watch us on the website, if you want to not miss any of the free videos I put out and tutorials, enter your email address. We hate spam too. You will not be spammed. Members, let's get to the weekend commentary. Okay, members, let's begin this weekend's commentary off with the Dow Transports. Remember last week I spoke about the Dow Transports here on the 15th, when we were considering prior to that going short of the market. And the reason why we did not go short the S&P 500 was the fact that despite the fact the S&P 500 was down on the day, we saw a bullish key reversal on the Dow Transports. I said, you know what? We need to hold off here. Because why do the transports matter?